Monday, May 13th. And it looks like, we're looking at the ES chart right in front of you. You can quickly see with the overnight pre-market activity compared to Friday. We're pretty much trading right in the middle of the range. So we tested the high from Friday in ES was 64, right in here. And then 62 is an area. And then the only reason, excuse me. So I've got this line at the 60 area that was drawn previously from here. So that just happened to be up there. It happens to be a coincidence that we stopped near there overnight. But anytime you have that, the resistance is this area itself. So if somebody is up overnight, they would really have to shop out that area. And you can see, as we're looking at it right now, it's testing the highs from Friday right now. So it'll be interesting to see what it does do. I have no position on. I'm just watching. Ideally right now, I would be getting shorted at this 62.50. That's what I would be doing if I wasn't focused on this. I'd be getting short there, and I'd probably have about it. The stop is, something's moving it. So I would definitely go look and see what sort of tech or maybe something's moving that I'm unaware of. But at this point, because it's pre-market, I'd probably be going half size, not full size, because I can see that it could push up 2.5, 3 points. It possibly could. So I don't want to take 2.5, 3 points on full size. So I'd be going to half size here. What I think, because it's a Monday, low volume, excuse me, allergies, guys. Low volume Monday, low expectancy. We have a ton of data this week, and people are going to be kind of sitting, waiting. That doesn't mean there won't be good opportunities to take shots. That's what I would tell you. But what I'm kind of curious about, I'm going to go on and throw this on my 30-second chart. I kind of want to see what the reaction. So this is when I'm looking at an entry. This is what I'm looking at. I will bring it down, and I'm watching for the reaction here. You see how that's much more fine-tuned? So it looks like, okay, well, there you go. You saw that rejection there. So a 30-second, it's a hell of a lot more clear. So I would have already received my 2-point scale. So now I'm covered on half a unit. And right now, I'd probably be looking at a scale of 59. Then I'd be looking at a scale of 57, and possibly down in here for 55, 56 scale. That's what I'd be looking at off of that short. So there you go. We just had a real-time short area, how I would have played it. What I want to do is I want to go back to, the SPX chart. The purple triangle reflects the area that if SPX were to open right now, we would be opening up at the top of the highs from Friday. But what's healthy to point out is, like, when you see that, you do the extrapolation from where the spread was from Friday, which is about 24. And so I look at where ES is, it's up how many points, add that to SPX, it's like, okay, if we opened up right now, we would gap up into this area. That's where we would open up. So the tendency when we have these little gap ups is that you'll get some, if there's something strong running out there, it could be continued move, and you could see a breakout. But more so than not, you'll see some light profit taking, and then it'll come down in here to the bottom of, like, maybe the middle of the recent range pre-market. And it's going to figure out, does it want to go down, and does it want to fill the gap? Because that's where the likely trade is today, a fill of the gap down here. This is technically the close from Friday, and this is kind of the wick gap. That's what I call it. Gaps are technically based on where the close, and you've got to close that area. But you also see the potential for this area up here. That area up there, that's 52.50 in the SPX. So you've got 5250 up there. Again, you know about how these gamma levels work. People are going to have interest, and there'll likely be sellers more up in that area. So right now, people are trying to sort this out and take a pre-market trade. And once again, I missed it because I'm talking with you guys. But in the event that we do come down and fill this gap, it's important to note this trend line that I do have here. This is a trend line from the last 5-6 trading days. And all it is, it's just given, I typically don't trade off of trend lines, but when I see a trend line that's near right an area that I know it needs to hold for a continuation higher, that's when I will respect. You see the confluence of the trend line and that close from Friday, that makes that area much more relevant. And algos will kind of seek that out, and they may flush a few stops in here, but that's an area where there's going to be people looking to get long. Any breakdown off of this area here, 5210 has to hold on SPX. I would say anything below here, that would kind of show a sign for a reversal downward. I don't find that likely going into all the data that we have coming up. I don't see that likely. But you know what? Anything can happen. So there's a lay of the land with where we are currently with SPX, and now it's kind of come back. So now you see how, let's get back over here. So here's ES. So look, I got my couple of scales here, and now here it's pushing for highs. So my basis would already be about on a quarter left. My basis would be 65, 66, and I will have already taken this stop out. I would have already taken this stop because I see something, I can't see the market internals right now, but something's pushing this, and you don't fight it. You're getting feedback from the price. Don't fight it. Take your stop break even. You've now pocketed probably 2 points on a net quarter unit with an improved cost basis. So there you go. So now we'll let this play out. So SPX is probably looking toward 5250 now, and add 24. So that'll give you ES 5274 area. So I think that's something to look out for. Anyway, with that, I will hand it back over to my friend, Mr. Smooth.
All right. Good morning. Okay. Hopefully everyone can hear me.
Yes.
So just starting with NVIDIA here, kind of watching this on Friday, just watching this develop. We've been in this kind of uptrend for back since mid-April. And then we kind of built this flag that we broke out of, and I was watching that for a trade Friday, and we actually got this move. I think David and I both were in it long. It came up to this resistance area and then just fell back down. Retested this trend line, which it held, and now we actually just got a little bit of a sell-off pre-market, then it bounced back off this trend line. I really feel like this is going to break out here in the coming days, although, we're coming into some pretty heavy data days, so I'm not looking really to swing anything long term, but just watching it intraday to break over these levels. We've basically got this 905 area that we mentioned Friday, that we took a trade off of up to the 911 area. If we can get over that, then we're pushing up to highs around 922. And then ultimately into the 960s, which would kind of be back at all-time highs. So those are the kind of the key levels on the video that I'm watching right now, just looking for some intraday action on it. Not looking to open up anything, swingy right now, coming into, PPI, CPI the next couple days. Back on indexes. Let me see here. So again, back to this sort of pattern that we've been playing out for the last week and a half, 2 weeks. Always kind of throwing out that number of 5290 as the ultimate target. since we were down here at, 50.76, I think is when I alerted this. So we're pushing pretty close to that. We're like 30 points off of it. The timing of this is perfect because this is a bearish pattern. So I think a lot of people are kind of expecting a hot print this week with inflation data. So obviously that would be a catalyst for a bearish setup, which kind of coincides with the technicality of this bearish pattern. If we don't get a hot data and the market wants to keep on pushing, I mentioned that there were two patterns setting up here. So let me get rid of that one. That was the bearish bat. And then this pattern kind of fits into two potential harmonics. Let me put this one in. This is the bearish crab. Let me make it a little bigger here. So this has a potential of going up to a 161.8. So everything stays the same, but this point comes up to about here, which is 55.60. Not necessarily expecting that, I'm just showing it as a possibility if this wants to keep on running. It's not unfathomable that we can push another couple hundred points if we get the data to line up. So that's really the key for this week. As Dan said this morning, and as David said, it's probably going to be a slower day today leading into that point because a lot of people are kind of waiting for that and probably in the same frame of mind as nobody's looking to take huge positions or swing too much into that data. It's really kind of a gamble to do that. So it's kind of a wait and see mode, but just know where we are, where the levels are. We have this 52, 53 area that's going to be supportive. On the Fibonacci side, we have the 52.90 that's going to be resistance. So that's kind of the big levels I'm watching sort of on the edges today. We've got, if we break down below that, then, we're back into this range here. Watch the SPX, watch the NDX, watch NVIDIA. That's going to be key. I'll talk very briefly about GameStop. Most people know that Roaring Kitty came back on the scene, posted something, and now we're gapping up 30% or more. Actually, I think Dan took a call in the video around here last week as it spiked up, and I drew these trend-based Fibonacci's, and it kind of hit the 161.8 and rejected this morning, and now it's pushing higher. So if we zoom out, this can easily keep on trucking to 31, 38, 42, 44. I mean, there's targets up there. Not something really I'm looking into playing, but some people like to do that with these meme stocks. They typically in the past have indicated tops in the market, but it'll be interesting to watch and see how it plays out. Gold, keep an eye on gold this week. That's going to be important sort of indicator on how the markets are going to view these prints coming in this week. Bonds also. So just keep an eye on that. Keep an eye on the VIX. And lastly, Tesla. Tesla's kind of opening up a little bit up, but kind of watching this does not look like a healthy chart to me. I kind of posted it last night. There's a gap down here below to like 147. So I'll be seeing how it acts in this range here, if it comes down, or if it tries to build a base up here at the 50 Fibonacci and then go back up. But especially if the market kind of drops this week, Tesla's been relatively weak all last week. So if we get those hot prints, I'm gonna guess that we'll see some more downside here. And that's pretty much it. Let me see if there's any questions in the chat here. Thoughts on Home Depot? I do have a little position in Home Depot that's gapping up a little bit. Let me see on the daily. I still like this setup. Be looking to take out Friday's high of around 350, let's say. But definitely
What price is that right there? Are we
three.
going to be opening right at that high from Friday?
No, we're opening like we're gapping up about a buck.
So it's going to close this gap in here then.
Yeah, so we're here. If we can push up to 350, over that, and then 354 is where there's another gap up to 358.
Yeah.
So there's definitely let me pull up this here.
I mean, how many points of potential upside are you seeing on this from here?
Let me pull this up. So I think when I spoke about this week, I can see 370 in this, but
Good.
we do have. Let me see.
Interesting. I got to see if I still have that in my long-term account. I know I traded up when we had that nice setup in the first quarter.
So initially we have this gap close. If we get into this gap, this closes around 358, and that's where the 50-day moving average is. So initially that would be the first target, and then if we can get beyond that, I'd be targeting the 61.8 at 370. So it's kind of funny, the Fibonacci's kind of line up with the other technical levels. So the first one is this 353.81, and that's kind of where we enter the gap here. We close the gap pretty much in line with the 50-day moving average, and then you've got the 50% Fibonacci just above, and then the 61.8.
And that has earnings this week too.
That has earnings Tuesday. Yep.
So how do we play this given the earnings, huh?
Yeah, I mean, I got a little scale in it already. Then it kind of went red towards the end of the day, so I'm basically flat in the position right now. I'll see if I don't get a decent scale today. I'll probably just close it out. I don't want to risk holding that into earnings, and then reassess it afterwards.
Yeah. Okay. That sounds good. Thank you very much.
All right. We got about 10 minutes, so time for coffee, and let's be patient today and trade the edges and see what happens.
Here we go. Good luck, everybody.
Thanks, guys.